Everyone, welcome. We're just getting started. I'm seeing more and more people coming in. So my name is Truman Du. I'm the CEO and co-founder of Jenny Impact, a fintech company based in UK, London. And tonight it's my great pleasure to have three great UK-based influencers in the emergingly large investing space in UK. So I will just briefly introduce them. Jen, Mama Furfa. Jen, just wave your hand so that everyone sees.
Hi there.
Pete, Conversation of Money. And finally, you're Mitchell.
Hi, guys.
Right. So what we'll be talking about tonight is around impact investing, diversity, and financial inclusion in investing. So I guess I will start just by quickly asking each of the panelists to briefly introduce themselves. And in particularly, I'd like you to focus on your investment experience, how long you've been in investing, and any particular investment preferences you have, such as ethics investing or impact, growth, dividend, anything that you feel like mentioning just to set the scene. Should we start with Pete, please?
Yeah, so I'm Peter, and background-wise, I've been a qualified financial advisor, worked in the sector for about 15 years now, 8 in the last years in wealth management. My investment style kind of encompasses a little bit of everything. I am very, very big though on ethical, but I do obviously invest purely for growth. I tend to adopt a little bit of a core satellite approach with most of my investments. So I hold funds, obviously ethically invested in growth, but also I'll hold some individual stocks as well.
Cool. Should we go to Yura, please?
Yeah, I'm 25. I started investing because I always just wanted to make money. And then when I was reading a lot of books, they always talked about investing. I didn't know how to get involved. And then I started to learn how to get involved, And then, yeah, I started my investing journey about a year ago. Started looking after my money better, trying to teach other people to do the same thing, got myself out of debt. And now I'm trying to gain financial freedom and trying to help other people do the same.
Sounds exciting. Jen?
Hi, my name's Jennifer Kempson from Mama Furfa, as you said. My journey with investing is kind of like Pete, is quite an eclectic. So I'm not investing purely to have an income. I'm investing as part of a strategy with money. So in particular, I will pick index funds and trackers for growth. Dividends aren't something I concentrate on, but more so our family is completely independent of the 9-to-5 job in both parties now. And we're looking at lifestyle investing. So I am looking for more cash flow, and it tends to be more impact investing we're doing. So looking at actually investing where we're helping other people on journeys as a result of our investments.
Okay, so that naturally leads the question to, could you just briefly talk about your current investment portfolios in terms of by country? Is it mostly UK dominated or more geared towards the US? And if anything about the size of the companies or the split between stocks and ETFs, so that the audience knows when you answer the questions coming up later, they have a bit of context of where you come from. Pete? You're on mute.
Yeah, so my portfolio's globally invested majority, because I think diversification is key. So with that in mind, obviously, the US market is one of the biggest in the world, the biggest in the world. So there's a focus there. I do tend to like a little bit of everything. So majority of my money is invested in funds. That incorporates ETFs as well as an approach, because you get the benefits of index funds and ETFs being low cost. ETFs obviously allowing you to have a little bit of flexibility within there and control. But then I do have exposure to individual companies that I take an interest in. So people like Tesla, for example, some cannabis stocks that I've recently picked up. So yeah, it's a bit of an eclectic mix within how I invest, but majority of them are in funds, ETFs, so on and so forth.
Yura?
Yeah, mine sounds very similar to Pete as well. Majority in index funds, ETFs. And then again, some single stocks such as like Greg's from the UK, mainly UK and American based. I am starting to look at like the Chinese market as well. I invested in Amazon, Tritax. So just there's a few solo, but mainly investing in funds.
Jen?
Mine's is quite similar, actually. I'm seeing a common theme. So I'm mainly, I would say about 40% of my index funds I'm tracking are UK, US predominantly, because like Pete, I recognise that most of the world's economy is driven by their decisions anyway. The rest is usually global trackers. I have about a couple of percent in some crypto. So I'll throw that in there. I've got various flavors of crypto as just my highly volatile part of it. And then again, another small couple of percentage is individual companies. I'm geared towards diversification, which means I'm not keen on backing one horse to go, but equally, and it tends to be also ESG funds as well for my index funds. I prefer to invest where I can in those choices.
Okay, so this is a question for all of you. So whoever feels like, please chip in. The kind of very common question we get at Gen Impact is when people start to look at investments, once they jump over that psychological hurdle of, oh, I'm now going to invest, they don't really know where to start. So the conventional wisdom is that you start with an ETF, a global tracker. So if you look at your past few years of experience, would you say that is what you started with as well, or going forward, has that kind of process of picking ETFs, picking stocks evolved and changed over time?
So from my experience, I started out using index funds and ETFs because I just think if you're starting out in the markets, you do need to be mindful of risk management, and investing in an index fund or an ETF allows you that diversification, that saturation of stock. Whereas if you're buying individual stocks, obviously you've got more active involvement in trying to pick the right one. So for me, it's kind of evolved over the years. I basically use a core satellite approach. So most of it's invested in index funds for saturation, diversification, global exposure with a particular interest in certain sectors or companies.
Yeah, I would probably say the exact same. As a beginner, it's really a case of getting your confidence with picking things as well, right? Because it's obviously something completely new to you. And there's obviously a lot of fears it can bring up with, giving your money to other companies. Index funds pretty much have always been my strategy. I do know though that over the years, when you do more, information search and you get confident in what you're doing, then I was more open to investigating other things. But the management is still, I don't want to be managing this every day. I'm not trading. I'm not putting in daily actions. I want it to manage itself, very much like your pension. Like I don't log into my pension every day to check what it's doing. So that's the same strategy that I want with all my investments, really.
I feel like I was the complete opposite when I first started. I was very naive when I was listening to the books, like I mentioned. So when I first jumped onto a investing application such as Trading212, I was investing into all single stocks and losing quite a bit of money. And then when I started to gain knowledge and start learning the process and learning how I actually wanted to grow my money, that's when I started to diversify, go into ETFs, go into the index funds, and then start actually seeing growth into my portfolio and seeing where I want to take it.
Right. That's a very interesting point you made, Yuria. How much of your allocation is split between stocks, single stocks versus ETFs, if I may ask?
I can't remember exactly just because I've written it down somewhere. I've done a split, but it's around 60% with ETFs and index funds.
I see. Okay. Right. And would you, sorry, it's a question to all. Would you say you want to start with doing the research on your own? So when you like, there are so many ETFs out there these days. Perhaps 5 years ago it's just a global tracker ETF, but now you have this big rise of theme-based ETF offerings, factor-based ETF offerings, as well as a lot of the traditional asset managers are branding their actively managed funds as ETFs, such as ARK Invest in the US. So would you recommend a new investor to just start research by themselves? Or would you say, okay, you can just put your money with a robo-advisor, for example, to begin with? You do pay a fee to them, but over time you can learn with the robo-advisor. So is there a particular focus or tilt that you want to recommend to someone new to investing?
I think for me personally, when I started investing in my own money rather than my pension, I'm glad there wasn't the options for robo investors, or certainly not that I was aware of, because I actually like the fact that I had to do the research and read a lot of books and, watch YouTube. There wasn't a lot of people talking back then in the UK. There was lots of people in the US, but not the UK. And I love the fact that you can, because I think with the type of investing that we're kind of talking about, it is personal, and personal finance should be personal to you. It should be based on the ethics that matter to you, what your goals are, how, dependent you want that money to be on you managing it. And I think I still see that as being the best course of action. Don't just take somebody else's word for it, because it is your money. It's what you want to do with it. And I think to just assume somebody else knows better than you is not always the right strategy. It should be taking the time, even learning the basic terminology. You've mentioned ETFs and stocks and funds. Okay, what do they actually mean? What's the difference? And I think that knowledge, when you ever start any journey with investing and particularly managing your money, is crucial, really.
Yeah, I would agree with that. I think for anybody starting out, the foundations are absolutely key, because there are so many options out there now, and the terminology is so confusing. I think understanding exactly what the options are that are available to you is crucial to understanding which path you should take, or perhaps you shouldn't take. That guided alongside, what you're actually investing for in the first place, and actually trying to formulate a plan to get you to your goal, to your objective. Those two factors are very, very important. But, some people are suited to robo solutions. Some people are suited to, looking at ARK Invest, for example, look at one of Cathie Wood's ETFs and building something similar to that. It really depends on personalities, I think, and to a certain extent, background and exposure, the ability to understand these things, actually the interest to understand these things as well, because it isn't for everybody. Some people don't want to spend the time reading books. And if that is the case, then, robo solutions are perfect.
Okay.
Yeah, I agree as well. The only issue really that I have with robo is if that person then disappears, you don't know what to do. I'd always want to have that control over. I know exactly what they was doing. I can see if they was doing something that was actually benefiting me rather than benefiting themselves. And I know how my money's being spent, because you work so hard for your money, and I'm sure people watching work hard for their money. And to have someone else control that and manage it for you, that's not for me personally. But like you say, it is down to people's behavioral traits. They don't want to be looking at the portfolios. They don't want to be actually actively managing it. So again, it's just personal preference, isn't it?
Okay. Yeah. So it sounds like you all actively manage your portfolio instead of kind of outsourcing that to a third party. So that brings the question to research part of making decisions. So one question coming out from the audience now is, how much do you think is enough when it comes to research? How much time or what kind of research you do on average to make you self-confident and comfortable that you're buying the right things for you?
This is a classic case of, you can get into the realm of analysis paralysis, where you look at so much stuff and then you just simply don't know what to do.
Yeah.
My specific philosophy is that I tend to go with things that I either have an interest in or have a little bit of a background in, so I can at least use that foundational knowledge to kind of inform what I'm doing. So I have an opinion of some kind. What I'm looking for when I do research is, obviously the fundamentals. Is it a good company? What are the accounts saying? Are they profitable? Are they paying dividends? Or do they have a high debt to asset ratio? But is that because they're investing in the money, investing in the business, with future projections? There are so many things that come into it. I tend to have a clear list of things that I think that I want to be able to meet. And I can only use Tesla as a prime example for this. And they say you shouldn't have an emotional attachment to a stock that you buy. You have to look at it dispassionately. But with Tesla, I've had the vehicle for 5 years. So the vehicle kind of drove me to buying in the stock, because I knew the product, I knew the service, I knew the hype around, oh my God, the customer service, the prospects for the business moving forward. And that kind of then supported some of the research that I did, even though at the time they weren't turning over profit. So I think for people doing research, you kind of have to take, information with a pinch of salt sometimes as well. It isn't all about the financials, but it is sometimes all about the financials. And you have to kind of find that middle ground that best suits your persuasion when you're looking at buying a stock, understanding all the time that, you know, you could be wrong and you could be right. And you have to balance your willingness to take that risk.
Mm.
Yeah, I agree with that massively. I always think my philosophy that I always talk on my channel is you can never really do enough research. If you just get to know the basics, learn fundamentals, like you say, detach yourself emotionally, have your fundamentals on why you would invest into something. And that can be anything from investing into property, investing into stock market. Have your fundamentals so that you can actually take a step back from the situation and think, is this a good investment? And then if you know the basics and you keep researching, you'll know the decisions that you're making are either beneficial, and you should be able to always have that risk factor and know that your capital's always at risk when you're investing money.
Okay. Yeah,
Yep, exactly. Oh, sorry, Truman. I was just going to say, I pretty much echo what the guys have been saying. The only other thing I would say is try not to get fear of missing out either. So Pete was talking about, you know, don't get stuck in analysis. My thing is just to make sure, well, I use your app. I really enjoy your app since I first spotted it as well. I use that. I use, you know, Yahoo financial information, the projections. But sometimes, you know, I'm very much like Pete. It's things that I enjoy using when I'm picking individual stocks. So I'll have Pepsi, or, you know, the things that I know, and I know the brand. And the fear of missing out, I think at the moment is quite predominant in some of the newsworthy things that wasn't maybe so 5 years ago, because the fintech industry is so new and, you know, so easy to pick up your phone, anyone, and do it. We couldn't do that 5-10 years ago. And I would always say, go back to the fundamentals. What do you want to invest in? Are you just doing it because you think you're going to miss out if you don't get it right now? You wouldn't do that in any area of your life normally. You wouldn't do that when somebody was offering you, you know, a marketing opportunity if they tapped on your door. So just be mindful about why you're choosing to invest and if it meets your criteria beforehand.
So leading to the kind of main topic of the night, which is why I want to ask this question about research in general, is, as we all know, ESG is becoming more and more popular, not yet mainstream, but much more widely accepted than perhaps it was 5-7 years ago. How much research that you put in that is about the ethical part of it, such as, for example, if you invested in Coca-Cola, do you ever ask questions about, oh, is actually the largest plastic producer globally just because it sells, you know, sugar water in a bottle? That's its business model. So do you and I guess for a company like Tesla, the question or the answer is very simple. It's big on EV, so it's a very kind of green tick on ESG. But any other parts of your research that is more and more involved around ESG, ethical investing, and socially responsible investing now?
I think for me personally, I mentioned that we're kind of shifting a little bit. I feel that I've got my backbone of knowing what I like to invest in every month, the autopilot, if you like. And then what we're doing is we're choosing for cash flow investments rather than long-term growth. And that's where we're going a bit more regional, a bit more local, a bit more UK based. And it is thinking about, okay, if we're investing in this particular project or particular development, we want it to then be an amplifier of something that we want to encourage in the community. So for me, it's one of the things when I'm dealing with those smaller amounts now outside of our long-term strategy, it's really key. And I do think it's amazing the information we have now as well. We can get a lot of background on how the businesses are run right down to a micro level almost, you know, what's in their supply chain, who's their manufacturers, how are they running their workforce. And I think with people who are investing in companies, the general public then giving our money into different stock companies, I think that's power in a good way, because equally you should be backing things and motivations in the community that you would want to encourage as well.
Okay.
Yeah, I mean, because my strategy is more of a core satellite approach, when it comes to my views and actually researching for ESG purposes, selecting portfolios, I tend to do that for my core strategy. So the ETFs, the index funds that I invest in, because that's where 90% of my money essentially is invested. One thing I prefer to do it that way for a number of reasons. I did a period of time in my career with, discretionary fund managers and investment houses in Canary Wharf. So I know that these companies that are now putting ESG standards at the forefront of their investment methodology, they have access to companies and information that I would never really be able to get hold of at the kind of quality and volume as a retail investor. And they're able to then leverage, huge sums of money to essentially push companies to do better on the ESG front. So if they don't have an ESG policy, if they're not currently working within that framework, they have the ability to essentially say, look, we want to invest in you. However, we would like to invest in companies with an ESG ethos and some clear directives to move you closer to said ethos. And they have the ability to say, look, we're willing to invest, but we want to take a seat on the board. We want to make sure that you're making headway towards these goals. So I tend to focus most of my energy on actually researching ETFs or index funds that have an ethical leaning, because I think when you leverage the size and the amount of money that these companies have, you are able to force companies that may not necessarily want to be looking at that right now to start looking at it right now.
Yeah, I agree with what both of you guys have said as well. And I feel like companies have to start looking ethically, because they'll get left behind with all legislations coming into play. Just look at the motor vehicle industry. If they're not hitting compliance, they'll start to fail and they won't be able to produce the vehicles that they were producing. And in turn, that's just going to affect the business on whole, as like you've seen with Tesla, they're electric. So companies have to start looking ethically into what they're doing, because if they're not, they're going to get left behind anyway. And then it's just going to deter from their business and they're not going to get the investment that they need. So they have a duty to look at it from a business perspective. And then in turn, that helps us invest our money into the business.
Okay, so is there anything in particular about ethical investing that you'd research on? Like the list of questions you ask yourself, is the company, let's say, like it's very common that we use Tesla as a very popular example, but it's just because it's a very household name. But any other companies in your portfolio, or any other, let's say even trackers, for example, S&P 500, people love to invest responsibly, but at the same time, perhaps 10% of the index is invested in unethical companies such as oil and gas or tobacco companies. So when it comes to research and asking questions about, is this company operated in an ethical way, what are the areas that you specifically look for and ask tough questions on?
Well, for me, I recently put money into a completely fossil fuel free plan, essentially. And the reason I went for that is because I drive electric, so it makes sense anyway. I like the whole idea behind it regardless. But one thing that I did like was how because it's managed by LNG, how they actually went about actually building and actually creating the companies that went in there. Again, because they have access and they have the ability, the size, the scale to be able to ask those questions. For me, in doing that research as to whether I should put any money into that fund, I'm looking at the directives behind why they're building the fund. What are the criteria for inclusion of the companies into that fund specifically? So for with them, I think the Paris Climate Accord was a really big part of some of their selection criteria. So I will generally tend to try and have a look at what the investment fact sheets and all that kind of say, and try and get a little bit of look behind the scenes in terms of what their criteria for inclusion is. And that is a big part for me. But again, most of my money is in a core fund kind of approach. So for me, I pay attention to that detail.
I'm kind of similar. So actually the majority of our growth investments is actually through Vanguard. So Vanguard offer a couple of SRI indexes, and going into their criteria as well is quite extensive. So I will make sure that I understand what's their criteria for selection. And it tends to be very, very ESG normal criteria that they're going for as well. Some of the tools that I'm using that I mentioned, if it's an individual company, I do use like Yahoo Finance, where they detail quite a lot of the ESG criteria, and using your app recently as well, that I know when that box is ticked, I don't need to deep dive too much further. I know that it's met all the criteria, but certainly I've noticed with my investing strategy, I talked about this on my channel at the start of the year, I want to move more towards the SRI indexes and the ESG, like slowly shifting, because with me, the criteria is really resonating as something that I actually think is going to be just driving the most productive and most profitable companies anyway, long term. I think in that, those indexes are being made up based on the ESG criteria. We're seeing the people who are, you know, doing the best in the world because they're naturally trying to build the best companies with a whole variety of characteristics.
Yeah, just to echo what you've just said, exactly the same, especially with the impact out, like you say, when the little box is checked, you know that they're trying at least to comply. And it's hard to get away from companies, like you say, if you are invested in, say, the S&P 500 that do have these companies in. So it is hard to get away from it. But if you're investing for the long term, which is what I do, I always say to try and aim for investing in the long term, don't go for the quick grabs type of thing. But when you are investing for the long term and you're doing your research, like say you're investing into Amazon, for example, and they're looking at trying to get drones rather than having the fleets of vans, just seeing what companies are actually trying to ethically benefit themselves and benefit the world. So when you're doing that type of research, looking in advance and seeing who's going to be around for a long time because they're trying to ethically comply with everything.
Okay, that's interesting. So next question, I guess, is around, so when we talk about ESG, so environmental, social, and governance, a lot of the focus has been around the E, which is the environment part of the ESG. But do you put equally or more or less focus on the S and the G part? So when it comes to governance, for example, I have a few friends and our users actually asking questions about, oh, Amazon is a very well-run company, but they have questions about the warehousing issue or their staff policy, how they treat their staff and things like that. And that is around, you know, the S and the G. And perhaps the same goes with Tesla. People may ask about the G when, you know, their CEO smoked pot on, you know, live radio. So it's all those things. Do you equally pay more attention to the S and the G? And if so, how do you kind of balance, you know, the three and come up with a confident investment conclusion?
The S and the G are important for me. I think maybe there's a little bit of work there in terms of company transparency, because when you look at, you know, if you look at specifically the G, there's a lot that goes into that. You know, you can then get into the gender pay gap and all this kind of stuff as well. And I think that there needs to be a lot more transparency around the S and the G. I think the E is a big thing right now because it is very much all over social media and all in the media. It's a global focus. Whereas I think the S and the G, sometimes it's harder to be able to research and find out what's really going on behind the scenes. There are certain companies in the world that are listed, say, for example, Verizon will be one as well, where they're very, very open around the gender pay gap, that kind of stuff. They're actually actively reporting. I don't know whether they'll be able to do that with COVID now, but it's also parity of, you know, the gender splits at the board. All those kind of things come into it. So whilst it's quite a deep area, there needs to be a little bit more transparency so that you can make a judgment call on those things based on data as well, and richer data.
Okay, interesting.
I think, well, for me, all three seem equally important. I'm not going to segregate one over the other. You know, Pete's mentioned great aspects of G and S as well. I think the problem is that there's so many criteria, and also every individual person will have certain areas that are more important to them because of what they would like to see the ripple effect in the world. So I don't think there's ever going to be a set standard yet. I think this is something that organically will keep changing. I don't believe that criteria right now for ESG or SRI indexes will be how it's going to be for 50 years. I actually think things will slowly mature and change. And I think it'll be interesting actually to see what comes out of this, because you remember, companies want stock investors, they want people investing in their business, and therefore not just the board level having power of returning numbers, but you've got to answer to your shareholders as well. And that includes typically, you know, kind of us with our money. And so that's naturally going to drive decisions or what they do or disclose. There's so many conversations that we're not anywhere close to being equality across the board. that, you know, and I don't think we'll ever fully get there. You know, people aren't perfect, so it's never going to absolutely be 100% spot on. But I do think that as we organically just all decide what's right and what's, you know, the criteria, I think it's going to be something that certainly more people will be looking as the benchmark. It won't just be what's your profits last year. It'll be, no, you really do have to have these criteria before we'll even consider investing in you.
Okay.
Yeah. And what Pete said as well, it'd help if there is that transparency, like with Verizon, if they're actually showing people that they have this gap and they're working on closing it. It shows the level of trust that they give to the shareholders as well. So it makes us want to invest more, because if they're transparent, we can see what's going on. If more companies are doing the same, it makes your research easier. You can make sure they're hitting all the ESG, and it makes a better investment plan for everybody.
Okay, superb. I guess just a change of topic here. We've talked a lot about ethical investing, and I do want to spend a good amount of time on the diversity part of the session. And I personally have a huge interest in talking about this, just because when I look at the traditional financial services company, they are pretty bad in addressing the issue of diversity. If you look at their products, if you look at their customer service, it's all kind of geared towards a very typical, you know, traditional customer persona, which is perhaps, you know, 30 to 40-year-old white male. That is the typical user for most of these traditional financial services. And in the recent years, companies like Monzo, like Free Trade, they are addressing this issue more and more efficiently, but there is still a lot to be done. So, and looking from your videos, you use a lot of these, you know, financial services companies, products and services. So from your perspective as a user, what is currently missing? What is done badly by these companies in addressing the issues of diversity from their from a product standpoint?
Oh boy, okay, where do we actually begin with this? Having worked in Canary Wharf and worked for discretionary fund managers, I think that for you to have a product that is that transcends and speaks to different people across different ethnic groups, age groups, and social economic groups, I think that your board has to be reflective of those groups. And unfortunately, you know, if you look at some of the big established brands, that diversity doesn't actually exist within the business. So therefore, I think that carries through to the product offering. I think what companies like Free Trade and Trading 212 and Monzo and the new fintech, you know, startup companies are doing is that they have a more representative workforce that understands the life journey of the different groups. For too long, investment has been, or investing has been perceived as this thing that only wealthy people do, that you have to be cut from a certain cloth to invest. That actually isn't true. And for some reason, it's perpetuated this myth that, well, that's a closely guarded secret that is only reserved for a certain few. And that in itself is actually changing. In terms of what companies can actually do, I think it starts from within. Try to make sure that you have different voices, different views across those different groups. I think that will then inform the product offering, that will then inform the language, how they communicate, and how they actually try to market to the general public. There needs to be more of that, because it needs to be relatable. There are too many people who feel as though these companies are not relatable. They have nothing in common with just like me growing up when I was in my 20s. Why would I go into your financial advisor? Why would one even talk to me, for example? You know, despite the fact that, you know, what was available now was not available then, but it wasn't relatable, and that needs to begin from within the organization.
Absolutely. I think, as being the only female on the panel as well, I really don't enjoy when I see products also tailored with colors or certain language or certain fonts, because of they're hoping that, you know, people who align to be female would want to use them. Like I just cringe when I see people thinking things are very in a box. As Pete suggested there, it's internal culture. Let's get representation. Also, when your marketing strategies talk, there's so many people talking using social media, YouTube, Instagram, wherever, to talk about what they're doing personally with their money and savings and investing. Talk to the people who are already using these platforms to tell other people, work with these people to really make sure the audience and the diversification is being built, you know, from that central out, like all the different feelers out. I love working with investing companies if I can give my ideas, if I can give my feedback. I don't like to also see when people are specifically trying to get a certain audience. I'd rather it be part of a holistic approach, that you are working with different representations, more so to get the education point, that almost like nobody's left behind strategy. You know, we're making sure, and that can be something, obviously, as you've called us influencers, I see us more as educators, just people talking about what we're doing. Talk to the people who are maybe got circles of influence right now, and that's how you become more diversified, because people then are seeing you in multiple different social groups, multiple occasions, talking about your product and using it.
I think you guys just covered that perfectly. Yeah, and doing things like this, what Genuine Impact are doing, and having people that are actually showing people what they're doing, and then getting them to actually expose it to show that different people are investing and it's accessible to everybody. The marketing just needs to be hitting everybody, the Gen Zs, the millennials, on the phones, showing how easy it is to access it. You don't have to have grown up on Wall Street anymore to actually be able to invest, making sure they've got that diverse team so that when they put the ideas across, it's coming from different backgrounds. So like you say, women in their teams, people from ethical Black backgrounds, Black people, all this type of thing. So people can actually relate to the brand, because if they can relate to the brand and they feel like it's a safe brand and it doesn't look like a gimmick or anything, they'll feel comfortable and actually want to learn on how to invest their money and using these types of brands.
I think sorry, I was just going to say, I think the problem has been past generations. It has been the very traditional poster that's been on the wall talking about investing and saving. That's all. And that could probably just be a UK culture, because it's really been in the past maybe 100 years that the UK has had more diversification. Just we're seeing more people on the television, on the radio, and all this. And I think to get back to my point, I love the fact that fintech is being genderless, faceless, everything. I think that's great. And actually, it shows how simple the concepts and to invest actually is, because we can all hopefully understand what's going on. I think it is just moving away from what's the typical, let's still involve the typical traditional route, because don't leave them behind, because they're still important. But let's also work on making sure our product isn't just seen as, well, unless you're a Scottish 30-something, female, don't ever consider us.
I think as well, just to add a little bit to that, working within sort of organizations, I know every business has a persona to say, but this is the big thing that I believe anyway. I believe that if you speak to anybody on the street, and it doesn't matter who it is, everybody has the same aspirations. And I think sometimes what business and we need to do is speak to those aspirations, because when you speak to an aspiration, you automatically break down the barriers of socioeconomic groups, ethnic groups. You break down those barriers altogether, because at the end of the day, we all want exactly the same thing in life. So if you can speak to, how do I actually get you to X, which is a standard aspiration, being able to live life with balance, have satisfaction, look after family, provide, right? Feel financially secure. You speak to that, and then all of a sudden you actually encompass quite a few people. You don't necessarily need to have, a persona per se, but the approach needs to be innovative, I think.
Yep.
And with the recent competition as well, with multiple companies doing it, it gives choice rather than just having the one platform, the one thing to go to. You've got your choice now, so it helps massively, because people feel comfortable with one app. Maybe, say for example, trading to one and free trade, someone might feel more comfortable with one than the other, and having that opportunity to pick and choose, which we didn't have before, helps massively.
Do you folks have any tangible examples of, this feature or this part of the service by a fintech company really helps address the issue of diversity. It can be a kind of unique feature or some kind of user experience that they've had with any of the fintech companies. Anyone who has been doing a good job so far, or no one?
Me recently with Trading 212, which is the one I've been using. When the Pi feature was released, that one was just a game changer for myself because I could put what I was investing on so people could see what I was doing. It helped me just actually passively invest. I didn't have to actively manage and make sure I'm splitting everything. There was the drip feature for all my dividends to be paid straight into the account. So it helped me get across the point that it's not difficult to invest and that everybody should really be doing it. And when you start reading and learning about it, you'll only wish you started when you was 18 and as soon as you can actually invest. So them types of features that make it super simple and everything's there, that was just a game changer for me.
I also think that some of the newer companies we've mentioned, Trading 212, Free Trade, Stake, people like that, they've been very smart about their introduction offers as well. Actually offering, a lot of people will use referral links and you get a free share up to a value of a certain amount. And I think it's broken down the barriers of also getting your first little portfolio, like getting your first share. You buy something for maybe £1 and you might get a free share. And I actually think compared, I started with Vanguard because that's all I could really find. That's all there was back then I could see. And that was very, it's very traditional. It's very in a box. We're actually seeing people like Free Trade, Trading 212, Stake. They've made it an experience that is very similar to a lot of websites you're using as a consumer anyway. Like how easy is it to go into Trading 212 and Free Trade and these things and just search for what you want, boom, you've got it. That has been innovation. And actually we touched upon the Pi thing from Trading 212, super smart. Like that is excellent. They've also been very smart with their community management as well. Yeah. Their forums are very actively used and very like Reddit, quite niche, but still a lot of community there. And it'll be interesting to see what the next thing might be. Like I'm a huge fan of the Atrium, and as you know, I wonder if we're going to see integration now with some of these major fintechs. Like this is actually what we're missing. And maybe I'm giving a little kind of anyone out there who's want to develop an app, but I think these are actually missing now some of these research elements that some of the bigger boys like eToro have all got much more analysis detailed in there. It'd be great to see that maybe coming in as well.
Yeah, I think the example that I would probably give that I think I came across maybe a few years ago that I thought was fantastic, just in terms of the ease, was with Moneybox and the ability to actually just round up your transactions. I mean, that is just a game changer for most people, because it's like you don't quite realize how much that 20p, 50p, 80p that you round up, that 1p, 2p actually adds up over a period of time. And it's so easy to do. And I just think that was a really, really great feature that was introduced. Tags onto your bank account, you can literally just round up those things and just get it invested in the market. And before you know what's happening, you've got £100, £200 kind of already working away for you quietly.
That's super interesting, because these product features you folks mentioned, perhaps when they were created, they don't really have a mindset of, oh, I'm targeting a race, I'm targeting a gender, I'm targeting a social economic group. They are just targeting everybody and make it super simple for everyone to use. That's a very interesting point. As Jen says, they're not really about colors or things like that. It's just the ease and the simplicity of them.
I think the most important thing is access. Giving people the sense that, oh, I can do this, and making it easy to do it. For too long, investing has been so hard and so complicated, so difficult. And it's little features like that that just mean, oh, well, I could just swipe, or I can just round up, and that's automatically going to go into my portfolio. It becomes something that is almost like a habit. Like I have friends who used to use it, and they used to make it a weekly thing. It's like, oh, rounding up this, rounding up that. And it used to be a competition in terms of how much would it all add up to? Because I want to see what that number is going to be at the end, because it's almost that moment of realization. It's only 50p and 20p there, but all of a sudden, if you spend quite a bit during the week, that's £10, that's £12, that's £15 that you otherwise would have missed and didn't know that it would amount to that kind of stuff. It's, features are really important, just to give people the ability to know that it's easy to do. I
think another game changer was really the free fees as well. 0 zero trading or zero commission that trading 212 and free trade kind of set off in the UK a couple of years ago. Again, that took away the traditional route where investing costs a lot of money. So we're going to charge 1-2%. And, you know, the guys will maybe testify, when you actually learn about investing, it's not just what you're picking, it's the charges. Because when you have a charge of even 2 or 2.5%, your investment is basically getting halved. You know, it works out over a long period of time. You start with 100% and they take their 2.5. It's very quick that they're eating into your profits. So I think that again opened up the, oh, wait a minute, charges actually matter here. And actually they matter quite a lot to what I'm doing.
And I think the competition on that actually is gold. And this is opening the doors to that kind of conversation, and those kind of features are amazing, because now you're seeing people like Eureka coming out and saying, well, actually, we're going to charge a flat monthly fee. That's it. Not a percentage, a flat monthly fee of X amount, regardless of how much you invest. And that is really, really powerful, because as people kind of get to understand the impact of fees on their investment, at the end of the day, you're investing for a reason. Trying to keep as much of that money back to yourself is powerful, but that only exists and comes to bear with competition.
Yep, super interesting. Just to finish with 2 questions on investing, back to the kind of general investing topics. One thing I'd like to ask is, looking forwards to 2021 and beyond, any particular areas that you feel very excited about? Is it can be a theme, it can be a sector, it can be a certain group of companies, anything that you feel really excited about, and maybe not yet, but will be putting your money more towards too.
Yeah, so for me, the EV race is very, very interesting to me. That alongside clean energy, green energy, because obviously the Biden-Harris administration, it will be very, very favorable, I believe, to that sector and that theme. So that's where I see most of my other money outside of the core approach going into, looking at specific companies that work in that space.
I think for me personally, outside, as Pete said, outside your core stuff that you're doing anyway, I'm interested to see about community management. What I mean is, we're going to have an aging world population, even more so, that more people are living longer and potentially retiring earlier. And it'll be interesting to see the sectors and what options come for retirement living, healthcare management, and all those kind of areas. That's something I'm interested in investing in over the next couple of years anyway. And I think that could be certainly areas in the UK that could really open up, because we're seeing it from the US, a lot of retirement villages and these kind of management investment types, working with those communities. So that'll be my focus, I think, as well.
Okay. Any particular companies that you're having on radar now, Jen?
Well, there's a couple of development companies in the UK now starting. I'm starting to see those conversations where this hasn't been something that's hugely popular. And now we're seeing older generations wanting quality of life that's been different to past generations. You know, the traditional nursing homes and things like that aren't probably what's needed as much, or, you know, there's more population who want something that's like villages. So at the moment, I'm just kind of, I'm sounding out. I think these companies are going to become more and more popular for investment options. And you could well see that we start seeing larger firms offer those as particular, you know, you can get your REITs and things like that. I think we're going to see more of those trackers as well.
Okay, it's interesting. You're right.
Apologies for that, my camera just died. But yeah, mine's similar to Pete's, EVs. I've been looking at as well at eHang. I'm not sure if you guys have heard of that. Something I'm doing a little bit of research on, where it's a flying the drone industry. So I've been looking at that, and yeah, pretty much similar to Pete's, really.
Okay. And the final question I want to ask is, if there's anything that you can summarize in a one-liner for anyone who's new to investing or loves to know about investing, what would be the one-liner you will share with others?
For me, it will be, make sure that you obviously try and get the basic information first. Like, knowledge is power, and applying that knowledge is even more powerful. but it has to start with understanding what you're doing and spend the time to research, get information before you jump in. Don't feel, FOMO, fear of missing out is really, really, really dangerous, and it could be quite a compelling force. So be patient, take the time to research and understand how everything works before you jump and take your first steps.
Mine would be pretty much similar. Gain the knowledge that you need to actually make these decisions. Invest in yourself. That should always be your first investment. Making sure you're just trying to better yourself in every aspect of life. Manage your finances well, because that'll help you in the long run as well, and you'll be on the right path.
Yep, very similar to the guys. I think investing in yourself or other businesses is just part of a money strategy. So I think you've got to be eclectic with everything you're doing. It's about saving well, spending well. You're allowed to spend your money on things that add value to your life. I also believe in giving. So there's 4 things I see money as a structure. And I think investing, try not to be too heavy in one area only. Try and maintain that balance, because I believe money's a tool, a resource, just like your time and energy. So don't let it be the control of you. Have the control over it for your future and for right now.
Oh, that's a very good sentence to end the session. So thank you very much all again to make the time and participate in this conversation. And I personally feel that I have more questions than answers out of this, just around the whole diversity. Or when I say questions, it's more about the things to consider, things to ask about around diversity, ESG investing, and how our company Gen Impact can make the products and services more appealing and more inclusive, and have a diversity mindset when we think about our future. So thank you once again, Jen, Pete, and Yuria, to make the time. And just for the audience, we'll be having this video available tomorrow, and we will also be producing some contents out of this panel discussion. So once again, thank you everyone for listening, and thank you once again, Jen, Pete, and Yuria, for making the time. Let's end there. Have a great night, and let's keep in touch. Thank you very much.
Thank you.
Thank you.
Thank you.
Thank you. Cheers.